So hello guys, welcome back to my channel. My name is Ajiboye Olanwaju, the founder and CEO of Tax Savvy and Pro Accounting Firm. So in our last video, I did a walkthrough of the smart and dynamic Excel template, a template that helps SME prepare their financial statements in an automated version. So if you've not watched the video, I will drop the link to that video in the description below. So just check it out. So in this session, we'll be drilling down to some of the features in the template. So we'll be starting with the data capture template. So under the data capture template, we'll be looking at the sales data capture template as well as the inventory data capture template. And also I'll be showing you the logic behind the FIFO technique evaluation of the cost of sales and inventory. Everything is actually automated, so you don't actually want to miss this. So stay tuned and enjoy the video. Thank you. So we are on the data capture sheet. So like I said earlier, we'll be looking at the sales and inventory data capture as well as the cost of sales. So this section is for sales and this section is for inventory as displayed on the screen. So we'll be starting with inventory, but before we start, you can see that this data capture sheet has several colors. So it's only those ones that are colored in gray that you are expected to input your records manually. For example, day, month, year. So you input it manually. Every other one, you are not to input anything at all because it either has formula or drop down menu or fixed value. So those in yellow has drop down menu, as you can see on the screen. Those in blue has prefixed figure or prefixed data, whereas those in pink has formula in it. So let's start with purchase. So on the 2nd of January 2026. So on the purchase, you can see that it has two rules. The first rule is for the actual purchase of the inventory, whereas the second rule underneath this is for your carriage inwards, because you have to add your carriage inwards to cost of purchase to arrive at or to evaluate your inventory and cost of sales. So that's why both of them are together. So we'll be filling both for purchase and carriage inwards simultaneously. So same 2nd of January for carriage inwards. 2nd of January 2026. So under the description, what did we purchase? Or did we use cash or credits? So we have two options here, credit or cash. So let's select cash. And under for carriage is already prefixed. The data is already prefixed. So all these are already prefixed. And this is auto generated. So the receiver for the purchase is inventory, and the same receiver for carriage inward is also inventory. So the giver, so for the purchase, did we use cash or bank to make the purchase? So let's see what the options that are available. So we have either cash or bank. So let's assume we use bank. So I'll select bank. Same thing for the carriage inward. Did we use cash or bank? So let's assume it's bank. So it auto populates the account class. So both of them, both bank are current asset under the giver side of the accounting entry. So what's left now is the unit price, quantity, and amount. So let's assume we purchase 1,000 units at the cost price of 100 naira. So 1,000 times 100 is 100,000, right? Then for the carriage invoice, it cost us 5,000 naira to move the goods. So you can see here the invoice number was auto generated, concatenating some data fields to arrive at this. Then the cash flow column too was auto populated. That's some formula within it. And this is the log date and time, which will capture the exact time that the accountant or the user is inputting it. So if you check my time right now, my time right now is on the screen is 5:47 p.m., which is what you actually have here as a timestamp. So the only thing left for us now is just to post. Click on the post purchase inventory button. So I'm clicking on it. It asks me to confirm. I say yes. So it confirmed that it's completed. So let's assume we made another purchase on the 5th of January 2026. So I'll replicate it in row 2 for carriage inwards as well. Then is it cash purchase or credit purchase? Let's stick with credit purchase this time. And we purchase from who? A trade payable account called supplier 1. So you select supplier 1 out of the list of supplier or any one that you feel this. And for the carriage inwards, let's assume we still use bank. Or let's use cash this time, not bank. Then here, let's assume we purchase 2,000 units, but at a selling price of, let's say, 150 naira. So 150 times 2,000, that's 300,000. And it cost us 10,000 naira for carriage inwards. So let's post this as well. Okay, so let's confirm whether all these were captured in the inventory sheets. So remember, the first purchase we made was a cash purchase of 1,000 naira, 1,000 units at a cost price of 100 naira, while the second one that we just posted now is 2,000 units at a cost price of 150 naira. So let's confirm whether this was captured in the inventory sheets. Voila, so it was captured. The date, the invoice number, the description, the amount, the carriage invoice cost, as well as the quantity. So it was perfectly captured. So let's confirm whether it was also captured in the journal. Yeah, it was captured as well. The cash purchase, the carriage invoice, the cash purchase, carriage invoice. Let's check the amount whether it corresponds. Yes, this is the 100,000, 1,000 units, 100 naira cost price, 300,000. Okay, so we're good. Let's confirm from the ledger as well. Yep, it was captured as well. This is the cash purchase, this is the credit purchase, and these are the carriage inwards. So let's see the account that you debited and credited. So the account that you debited is the inventory, which is correct in accordance with the double entry principle, and the account that you credited is bank. Okay. For the second one, it was a credit purchase, so it's debited inventory and credited supplier 1. Okay. So same thing for the carriage invoice, the debited inventory and credited cash. Okay, so we are on course. So now let's make some sales. So go back to the data capture and go to our sales. So remember, it's those ones that are in grid that we are meant to fill. So let's assume on the 10th of January, we made the sales. We made the cash sales. So let's select cash sales under the description. Let's assume we pay through bank. So the receiver, we received the sales through bank transfer. So the receiver will be bank, will select bank. And let's assume we made this sales of let's say 1,000. No, let's say 800 units at a selling price of 200. Total will be 160,000. Okay, so the sales invoice automatically generated. So what else do we need to fill? I think that's all. So let's click on the post sales button that we have here. Confirm, yes. Posted successfully. So let's post another sales transaction. Okay, before we go ahead, for each sales, once every sales is made, we also need to compute the cost of sales pari passu. So this last row under the sales data capture is for capturing the cost of sales. So all these things has already been auto-filled. You can see even the cost of sales amount has already been auto-filled. So let's see how we arrive at this 84,000. So to check how we arrive at this 84,000, we go to the cost of sales sheet. So remember, these are our two purchases, the 1,000 and 2,000 units that we purchased. So this is the total amount, which is the addition of the purchase amount plus the carriage inwards. will give us the total amount. Same thing for the second purchase. So for the first purchase, it cost us 105,000, and for the second one, 310,000. So the unit cost will now be this total amount divided by the quantity. So 105,000 divided by 1,000 here will give us this 105. So in other words, for this batch, the cost of sales will be 105 per unit, whereas for the second one is 155 per unit. And our sales that we just made now is 800. So 800 is still less than the first batch, which is 1,000. So using the FIFO method, the smart accounting template will automatically pay from this batch because 800 is less than 1,000. So the cost of sales per unit that we'll be using will be for this one, which is 105. So 800 times 105 is what now give us this 84,000 naira that we have here, which is now reflecting under the data capture sheet as well. So what we just need to do is just to post cost of sales. So I'll click on the cost of sales button, I'll confirm, and okay. So now let's make another sales. Let's assume on the 15th of January 2026. So this time, let's assume instead of cash, we made credit sales. So the receiver here will have changed to trade receivable. So which of the customer did we sell to? Let's assume we sold to customer 1. Normally we credit sales, which is the giver. So let's assume we sold 1,000 units at the selling price of 200 naira. So 200 times 1,000 is 200,000, right? So that's generated the invoice number. And so let's click on the post sales. So the next thing will now be to post the cost of sales. So let's go to the cost of sales sheet to see how it was computed, to see the logic behind it. So remember the last time we initially sold 800 units for the first batch. So meaning that it was remaining 200 units that was yet to be sold as at that time. But after the second sales, which is 1,000, the smart Excel knew that the 200 unit that is remaining from this first batch has to be exhausted first because we are using FIFO method. So this 200 unit has been exhausted. That's why the total quantity is showing 1,000 here, and the quantity remaining is showing 0. So that 200 times 105 will have given us this 105,000, right? No, okay. The 200 times 105 will have given us, let's do the computation here, equals to 200 times 105. That's 21,000 naira. So since we sold 1,000 units for the second sales batch, so the cost per unit will be this for this particular second sales that we made, which is 155 naira. So in other words, the remaining 800 units will be multiplied by that cost of sales unit price. So multiplied by, what is it? 155. This is it. 155 cost per unit, 155. So by the time we now add these two together, 21,000 plus 124,000, we have 145,000 as the cost of sales. So we should expect to see this 145,000 in our data capture sheet. So you can see 145,000, 1,000 units. So I'm just trying to show you this, that is, we are actually adopting the FIFO technique, and everything is auto computed and generated. So we can go ahead and post this cost of sales. So once you post this cost of sales, it moved it to cost of sales. So now let's confirm all these entries that we posted. So the inventory, we confirmed all the inventory from the inventory before the sales. So these are the sales that we made. So it's already populated here. So the cost of sales I showed you earlier. Then the journal too. Everything is captured in the journal, the purchase, the sales, the carriage invoice and the rest, and the adjustment for cost of sales. Then same thing in the ledger, you can see them. The purchase, the sales, adjustment for cost of sales, credit sales, adjustment for credit sales. So the smart Excel knows automatically know the accounts with debit and credits. So if you check them, it's debiting the correct account and crediting the correct account. In this case, it was debiting cost of sales. Because cost of sales is an expense and it's crediting inventory where the sales was made from. So this is the ledger. So now let's check the trial balance if this is also reflecting in the trial balance. So yeah, so everything that we just did is automatically reflecting in the trial balance as well. You can see the inventory, the total debit for the inventory, the cost of sales from the inventory, and what is remaining in the inventory. Customer one, which is one of the trade receivables. So trade receivable is expected to have a debit balance, which is why it's in credit. Cash. This is the cash that we spent on the carriage inwards. So it's a credit. That's why it's showing the credits. The bank too, the same thing. Supplier, sales, total sales we made so far, cost of sales. Now let's check the total. So you can see the total debit equals the total credit. So I think everything is clear now, right? So if you also check the dashboard, this is the dashboard. So let's check the dashboard for the P&L statement. So this is the net profit we've made so far, 131,000. Same for the gross profits. This is the sales we made so far. This is the cost of sales. So you can see everything is auto dynamic and automated. For the balance sheet, this is the total current asset figures at this moment. The current liability, which is majorly the trade payable, the assets, the total asset, and the rest. And the financial risk calculated so far, which is for the net profit margin is net profit over sales and the rest. So you can see everything is automated. So I think that should do it for now. So thank you very much for your time. So in the next class, we'll be looking at the demo for the other data capture options that we have available. So thank you for tuning in. See you next time. Bye bye. Thank you.